Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, the trend is up and it's time to engage. That's the view of Louise Bedford from Trading Gain. She says it's positive when volatility is low and the index is above its moving average. However, she points out that there's less momentum at the top end of the market compared with the mid to small caps.
Unfortunately for everybody who has got a superannuation package that is just looking at that top end, we are cold at the moment, which means we are underperforming the entire market. So with this, you can see, even though the ASX20 is above its own moving average, it is below in terms of relative strength comparison. So your money could probably work harder elsewhere. So if you are using a self-managed super, this is not where to pop your money, and neither is the next chart, which shows the ASX100, or the chart after that, which is the ASX300. We have got a trifecta of cold. All three are cold. Now that's interesting when the market's going up and up and up. It means that the gains are concentrated into the smaller stocks underneath the top 300. That is where your focus should be, and that is where the money is pouring in.
Well, the largest stock on the Australian market is CBA, which has seen its share price move well ahead of what most brokers see as fair value. However, Thomas Atkinson from FX Evolution notes that many global banks have broken out to new all-time highs, and that strength in the finance sector is a good sign for markets.
The thing about CBA, though, is it may have run ahead of itself. So it went all the way up to those lofty heights at 190. It was getting charged at like 29 times forward earnings or something. It was pretty high. And then now it's pulled back down. But this has been in a steady, what we call lower high and lower low decrease since around July. And it's now hit the biggest trade area again, which is around that $167 mark. And that's a really critical level for traders and investors to be looking at. So we've seen some buying, it looks like, or some bid that's come in around this price. I'd like to see a little bit of strength here in CBA back up to around that $173 mark, and then the real test happens on top of that series of lower lows and lower highs. If we can get a higher high above 175 in the future, it could spell further gains on CBA. But for now, it's in a downtrend on the smaller timeframes, but it's hit what I would say is a critical support.
Thomas notes there has been a rotation, some of it out of the big banks into the resources stocks. Here he takes a look at the largest locally listed miner, BHP.
So we've seen BHP, which I think we've got a chart for, start to find some strength about 2-3 months ago, back in that kind of July, June area. And we actually spoke about it, I believe, on the show, and we talked about the improving pricing there and the improving liquidity in the Chinese markets. Now, a lot of people don't realize, but of course, BHP is very linked to China. So if China's improving in terms of the stock market, often, and their economy is starting to pick up, then you often do see improvements in iron ore. So I've got a couple of charts here. The first one is the most traded zone, which sits around $39.60. This is going to be a really critical level should BHP drop a little bit after the div, after the earnings. And that is the zone that has seen the most trade on it over the last kind of year. So effectively, it's an area where big funds are buying and selling in mass quantity around that zone. So I like the charts on the iron ore at the moment. I think the improvement is there. We're seeing the same thing with the copper bottoming at the moment as well. And it's kind of like the catch-up trade. Lithium, iron ore, copper, some of the metals that haven't done so well in recent months have started to improve, which is good.
That's it for this week's edition of The Charts to Watch. Join us for more technical talk next week. Happy trading.